right. Hello, everybody, and welcome to episode 34 of the Bao Podcast. And we again invited a familiar face. He was one of our very first guests and is back today, Arne Allewaert. Arne is the co-founder and managing partner at AMAVI Capital. AMAVI is a fully independent investment fund with a pan-European scope, established to support the growth of the leading and most promising scale-ups active in the PropTech industry. AMAVI brings the traditional real estate industry on the one hand and European PropTech scale-ups on the other. Before starting the episode, a short disclaimer. As you probably already have noticed, today is our very first online episode. This is certainly not meant to become a habit, but agenda conflicts made it a physical recording very difficult, so making the recording online was a perfect solution. So, with that being said, let's jump into it. Welcome, Arne. How are you doing?
Thanks for the invitation, Benjamin. Good to see you again. Has been a while. We
Indeed.
just discussed before the session started that it has been 3 years ago. So that's way too long.
Indeed, a little bit over 3 years. And maybe we start from there, Arne. In those 3 years that we were discussing the PropTech market and everything that was going on in this market, what have been the biggest changes for you? What have you seen going on in the market, and especially after COVID, what have been like the biggest lessons?
Whew. Honestly, I think it's a very different world compared to when we first talked 3 years ago. Honestly, there have been quite some shocks in the world in general since COVID, and luckily that has actually enabled and accelerated what we do fundamentally. Because as an investor, it's very hard to do any meaningful stuff in a very flat market, in a market which doesn't move up or down. However, in a volatile market, I think, which is rightfully said, the market in which we currently operate, you can do a lot of interesting stuff if you're on the right track. And just to make that a bit more tangible, what have we seen since COVID? Yeah, COVID, of course, has been the first huge disruption. And just to be clear, we were founded as a company in March 2020. So we started with our first fundraising in March 2020, a few days before the first lockdown. So you can imagine that was the first shock to us as well. But again, we have survived and closed the fund, and a bit later in beginning of 2021. That was a first big shock to the world in general, which meant, okay, remote work is needed and it's possible as well, because nobody thought it would be possible. And also a lot of other remote stuff needed to happen. For example, remote viewings in real estate, which nobody thought that would even be possible, etc., etc. And then that was the first big shock which happens. But then also we saw a couple of years ago now already is the huge cost increase, general inflation increase that we saw, combined, of course, with, let's say, the largest impact having in the construction sector, which is a huge cost increase, and also combined with that is huge interest increase having a large impact on real estate in general. And I think taking a step back, those external shocks are coming from different angles. We also have had, of course, several wars, unfortunately, in different regions. We've seen regulatory pushes upon the industry, etc. So we have very different external shocks happening to the industry, and that actually made a lot of things possible which would never be possible without. And for example, if you look at several of the companies we invested in, or several of the buckets we look into, they need a sort of external pressure on the industry to actually become adopted. And I think this is, again, one of the upsides of those external shocks, that it would not be possible to do what we do today without having these external pressures on the industry.
So can you give like a concrete example of one of the businesses that you are currently working with that would not have been possible without these shocks?
For example, one of the buckets that we invest in is specific construction tech, right? Which the business you're active in as well. I think none of the real estate businesses would be voluntarily looking at different construction materials which might be slightly more expensive in the current market today, or even the same cost price, if it's not pushed upon by some party. And some party could be government, like putting in a new regulation, putting a cap on the carbon emissions that you can actually emit as a construction project, or can be requested from the market, like the tenants and the new occupiers demanding a specific type of building from the developers and the construction companies. So again, this is a pull or a push, but both could be extremely important for the market. And yet again, it's not the real estate companies themselves that normally will start innovating. That has been very clear by now.
So there always needs to be a external variable, whether it's the market or the government, that's pushing the customers to a necessity to innovate, basically.
Exactly.
Okay.
Exactly. The same is true again for the costs. Let's say the construction costs increase. It pushes real estate parties to look for alternatives, because if at the bottom line, yeah, you don't have any profit anymore because of increased cost prices, because of pressure on revenues as well, yeah, then you of course need to creatively look for other solutions, like what other materials can we use, or can we look for different types of ownership in which we don't have to buy the land per se. And you see, these types of situations actually create very interesting, let's say, solutions, and that's actually what we need in times like these.
Mhm. And that's something that really has been pushed now because of I think also the lower margins and the higher construction costs.
Sure.
Like the market and the developers themselves are also now more open for different innovative type of solutions, right?
Open, but I think in the same sentence it should be said as well that it's not the best climate to adopt innovation in general either. So
Okay.
when businesses are focusing on the core business because they need to put out fires, because if they don't, they could be bankrupt tomorrow or the day after tomorrow, it's not the best setting to try new innovative solutions and ideas. And so we need to balance those two. That's why what we look for in companies are, of course, as we discussed before, the killer founding teams to really persist, because it's really challenging out there. You really
Hmm.
need to have a sort of persistence to keep going. But with that combined, also you need must have solutions and not just nice to have solutions. The nice to have solutions, they're being said currently, thank you, very nice solution, but let's maybe talk next year. Whereas we need to find those must have solutions, because they need to have those solutions either to comply with regulation, either to have in order to succeed as a company, etc. So that's exactly what we need to find.
Okay. And so indeed, because I forgot the first time we talked, you were only 3 months active as a fund. And now we are 3 years further and you have done 7 investments. Am I correct?
22, basically.
22. Oh,
M-
okay.
maybe good to have to give a quick background on that. So maybe just to zoom out again. So indeed
Yeah.
started in 2020 as an investment company. What we did is we raised the first fund in 2021. That's a 70 million investment fund. We invest in companies in general bringing innovation and digitization to the built world. So that's a very broad concept. We
Mhm.
used to call it PropTech. We don't like to call it PropTech anymore because it doesn't really it doesn't really fit what we do. Is a lot broader than just prop and tech. Um, what we did is we did 11 investments until summer 2023, and those investments were spread throughout Europe. So already, let's say, from Finland up in the north, up to Portugal in the south, and everything in between. But what we
Mhm.
did in summer of 2023 is we also acquired another investment fund, which was based in Sweden, and they had a portfolio of 11 investments as well, mainly in
Okay.
Sweden and Norway. And so
Okay.
we acquired the portfolio and the existing team, and that's why we currently operate out of two countries. So having an office in Ghent in Belgium, and also having an office in Stockholm in Sweden. And that's quite an
Okay.
interesting one, because having that very close tie to the Swedish and Nordic real estate and investment scene is a
Mhm.
very important one for us because it's a very different market and a very interesting market, we believe, for property investments.
What are the main differences?
We see Sweden in particular as a very interesting test case for solutions, let's say innovative solutions in general. First of all, because real estate scene in Sweden is quite open to innovation, it's quite open to embrace new ideas, new technologies, etc. That combined with a quite advanced tech scene as well. And why is that? Because the Nordic founders in general, and especially in Sweden, they know that Sweden is not the largest market out there. It's an interesting market to test ideas as a sort of sandbox. And that makes that products are often made to scale. So they know
Okay.
that they can just test it in a certain market like Sweden, but as soon as they have a sort of MVP which is successful, they immediately scale the company to other countries. And that's a very interesting mindset, we believe, because in other countries, without of course being too cliche, but let's say just for the sake of the argument, let's say France, it is already quite a big construction and real estate market. So you can build relatively successful companies within one certain market. In Sweden, for example, it's hard to do so. So they need to make the product scalable from the get-go. And that's, I think, a very interesting mindset.
Could you say that there's similarity with Belgium?
In theory, yes. So indeed, on paper, on
Okay.
paper, you're you're right. So it should have some similarities, and to a certain extent, it is true. But we
Okay.
see a lot of companies struggling doing that, though. So they have the mindset of let's say creating a company which should be scalable from the get-go, but then in execution of scaling, it's not that easy as they assumed it to be. But indeed, in theory, you're right. That should be one of the advantages.
Okay. So, 22 investments in 3 years, and roughly half of them have been through the merger of the fund in Sweden.
Yes,
Okay.
exactly.
And
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 that seems a lot. Just to be clear, Benjamin, that seems a
yeah,
lot.
yeah.
It is a lot as well. There are some smaller investments included in that as well, which would not be within our initial investment scope, to be very honest. But they were, of course, part of the transaction that we did. So what is now currently the strategy is, of course, looking at those 22 portfolio companies. We
Mhm.
already we already exited two of them because they were
Okay.
just too small, not a core strategy for the fund as well. We made good returns on them, let's say multiple and IRR wise, but nominally they're neglectable. They're just very, very small. So what we do now is we focus on, let's say, the most strategic assets within the portfolio, and then look how can we grow those companies? Can we invest more? Can we look for add-ons to actually enlarge the footprint? And I think that's an important one to mention is we are, I think, firm believers of a consolidation wave that needs to happen within the prop tech scene. Again, to use that word, prop tech. And that was from the get-go the case when we started off with the fund. That was already the idea. But of course, in those, let's say, 2.5 first years, the sky was the limit, right? Every single company could get funding, and they all thought that they could become the next unicorn, etc. Whereas now it's a very different scene, it's a very different setting with a lot of more capital restrictions, and that gives us a lot of interesting buy and build opportunities. So suddenly we can actually buy other companies which thought they could fundraise and grow organically to a unicorn themselves, which now see, maybe we should pursue an exit and just do something else. And within our portfolio, we are actively pursuing that strategy. So within, or let's say, strongest platform companies, we look for add-ons for companies we can acquire and just add to that larger entity.
Okay. So your involvement in these businesses is also much larger than being on the board. It's also really being, yeah, really think through and discuss the strategy and the scaling
For
of the
sure.
business itself.
For sure. And
Okay.
again, depends from company to company, depends on the stage of the company, depends on the investor base, etc. But generally speaking, yes, we're quite heavily involved in the companies. Not, of course, from a day-to-day operation. This is what we want to avoid because that would actually destruct more value than it would bring because the company should be run independently, obviously. But strategy-wise, and especially on these add-ons, we are very close to the company.
Mhm,
That's the added value you want to bring.
mhm. And I heard you mention just now that you think there's going to be a consolidation phase.
For sure.
Okay.
It's
Can
very clearly
you
so.
can you say a little bit more about that?
But it was already clear, let's say, for the last 5 years that PropTech is a relatively, again, I keep using the term PropTech, but let's say that the innovation wave within the built world in general was a relatively new concept in Europe. And that meant that you had a lot of new initiatives popping up, and you had a few initiatives in one country, and you had a few similar initiatives in another country, etc. But most of them still focus on that single country. And
Mhm.
what the sector actually needs is just more larger companies with more mature product offerings or with combined product offerings, because we see even if you have different products, let's say company A in one country and a company B with a similar product in another country, they actually go after the same customer. That's quite clear. But you
Yeah.
could also have companies with different products even going after the same customer. And so you need to have a more combined go-to-market strategies, especially with companies having similar products, but also with company having different products, but going after the same customer. And that's actually what we're currently exploring, is trying to combine those go-to-market strategies more.
Have you already done it with one of the 20 or two of the 22 companies in the portfolio?
Yeah, with several of those. So what we did is we're building a platform for self-storage currently with the valet self-storage. So not the classic self-storage, but where they pick up the goods at your doorstep, then transport it to, let's say, logistic centers outside of the city. It was from origin a French company with several
Hmm.
locations in France. Was the let's say south of France, including Bordeaux, Lyon, and also Paris, etc. But then last year we merged them with the UK player, so London-based player, so active in two countries, and they also expanded into Belgium recently. So that's one. And next to that, we also have a stake in a similar company in Sweden. So maybe one day we could still combine that
Okay.
as a larger platform as well.
And what are
That's
they
one.
called?
Ustock is a company called
U-Stock?
Ustock, like YOU stock.
Okay.
That's one example. And of course, expansion is still on the agenda to other countries as well. And this is one great example where an add-on in terms of geography makes a lot of sense. So we would not buy another, let's say, a similar product in another region, because the product, we have a very strong product, but we need geographical presence, having a sort of warehouse, having a customer base in another country. That really helps the company grow exponentially next to the organic growth. So we don't, of course, stop with organic growth, obviously, but this acquisitive growth, as we call it, really helps to complement the organic growth. That's the idea.
It's an M&A,
And as
it's an M&A strategy that you
exactly,
put on top of the organic growth.
yes, and it could
Yeah.
be acquisitions literally, or it could be
Yeah.
mergers. So this was a
Yeah. Yeah.
merger with a UK company. And another example is, for example, Casafari. That's a company based in Southern Europe. So based headquarters in Portugal. They're active in Portugal, Spain, Italy, France, and so Germany as well. And what we did is last year we also acquired a company with Casafari. We acquired a company in Germany, and that was a bit of a different story. They had a different product offering. So just to make it clear, Casafari is a real estate data provider. So they have a lot
Okay.
of insights on mostly residential real estate. So again, mostly in southern Europe. And we had the possibility to acquire a company in Germany, which is an interesting market to add on. So that's one. So it could, with the same Casafari product, we could quicker expand to a different region, being Germany.
Hmm.
But they also had a different product offering next to that. So whereas Casafari is mostly focused on, let's say, real estate investors, real estate brokers, developers, etc., the company in Germany had a more focus on corporates like McDonald's, or more location intelligence. Like, look, McDonald's needs to pick a new location, show me which locations are actually best fit, and show me how much sales I will get from that specific location.
Hmm.
So that's a very interesting, let's say, cross synergy. We can bring the Casafari product to a new region, but we can also bring the Targomo product, which was the German company, to other regions, being Southern Europe. So we can actually, it works in both directions. That was a full acquisition that we did, but we see the benefits already of that acquisition.
Sounds very logical. Are you
Yeah.
currently looking at certain verticals where you think a lot of of opportunities are present at the moment?
Yeah, looking at several verticals. So we invested in, and of course, in a lot of verticals like water. Water tech is for us still an important vertical to be invested, which we did two investments in. We're looking, of course, at energy as well. Like for example, batteries on the construction space. Still looking at a lot of companies. Then also looking at short-term rentals, which is also an interesting one for us. So
Okay.
everything like vacation homes, which could be rented out on the shorter term, and by doing so, increase yields which you can normally not have on residential real estate. What is interesting, I think, it is not pure a technology play, and that's why I don't like the term PropTech anymore. We also look at companies which bring new business models to a certain industry like real estate, and that way increase value. For example, short-term rental is an interesting market, but it only becomes investable if you have a management layer on top, and a management layer means a certain technology layer as well. And what I mean with that, for example, if you manage a portfolio of, let's say, 3,000 vacation homes, they could be dispersed over a certain region.
Mhm.
Without a certain technology layer, it cannot be managed efficiently. And that's what I honestly believe is interesting is we should not per se look for the technology companies only. We should also look for companies which use technology in a smart way, and by doing so, outperform their peers in the industry. And that's a very, I think, an important belief that we have, is also be able to look for those tech-enabled companies.
Mhm.
And that again creates then new asset classes, which again, as I said, were not investable before and suddenly become investable at scale. And that's where we
Yeah.
always want to be, is operate on the verge of real estate, private equity, and technology. And sometimes it could be a bit more real estate, sometimes could be a bit more private equity, sometimes a bit more technology. But having those three different angles in our founding team is still our differentiating factor to most of the investors out there.
Mhm. Yeah, it reminds me of a couple of years ago, and I'm talking about 4 or 5 years ago. I very clearly remember that when we went to potential investors and we showed what we were doing, they said like, "Yeah, but it's no blockchain. Where are the droids? Where are the robots?" Like they were all looking for these extremely high tech solutions,
Yeah,
and I have noticed in the last couple of years that that mentality has, yeah, I wouldn't say it's completely gone, but there has been a shift. It's more back
for sure.
with like
Feet
common
on the ground.
sense, feet on the ground.
Yeah.
Uh, yeah, what's your return? When are you breaking? Like it's more things have become more normal again.
I
Which
agree. I
first,
fully agree.
yeah, yeah,
There's some return of ratio in the market indeed for the last 18 to 12 months, which is of course very good, I believe. And
yeah,
indeed,
yeah.
finally, a focus again on capital efficiency instead of pure growth, pure top line growth. So indeed, that we notice as well is like companies should not per se be rocket science. Okay, you have AI craze on the one hand, but we look at the fundamentals again of a company. Is this company be able to make or to generate significant profits over the years to come? And what
Mhm.
we like to see as a metric, and this might is an interesting, I think, sidestep, is we love to see the rule of 40. I don't know if you're familiar with the rule of 40, but this is a very interesting combination of balancing growth and profitability. So the rule of
Okay.
40 basically comes down to simply adding up the annual growth, your revenue growth
And the
in
margin,
percentage,
no?
and your margin, exactly.
Uh,
And those two should be more than 40. And you, of course, you can have the rule of 30, the rule of 50, whatever. But it basically comes down to balancing those two out. Because you can have a very high growth company, let's say over 100% growth, which is still heavily cash burning, which is fine. Because if your growth stays that high, you get there in a few years. If growth, on the other hand, really stagnates and even decreases, yeah, then you suddenly have to become quite, let's say, profitable quite soon. And balancing those two out is very interesting. And in best case scenario, you have founding teams which can actually turn the levers. Depending on market conditions, they add a bit more growth at the cost of profitability, or they add a bit more profitability at the cost of growth. And if you manage those, then you're really in control. That are, of course, the companies we love to see.
mhm. The 20% margins, are you talking gross margin or
No, net profit margins.
net profit margins? Right. Yeah. Yeah, I read it recently in an article about the investment that was done in Team Blue of Jonas Dana. What is it
Exactly.
called? Yeah, that apparently that they are growing on their level with a rule of 50,
Exactly.
which I which I found,
That's crazy.
yeah, like
At this size,
Jesus.
yeah,
Yeah, it was quite impressive.
that's what we need to
Okay,
see.
yeah, I think it's a good general rule to indicate or to follow. Um, so now you've been active, let's say, for 3.5 years. What's what's in store for the next 3.5 years, if we put it that way?
A good question. Well, we did shift quite a bit in terms of investment stage, I would say. Well, it's not really a shift. We had a broad mandate. So we did companies, let's say, from late seed up to Series A. So investment tickets from 500K in theory up to 10 million per company. So it's still a broad range. What we see now is we tend to move a bit upwards on that maturity scale. So we like to see more mature companies having more of that product market fit, having that repeat founding team, preferably seeing some EBITDA, some profit as well. So we're more moving towards the growth stage of the market rather than the pure VC stage of the market. This is where we can actually add the most value. So really at the scaling stage, getting into different regions, into different countries, looking for add-ons, as said, that's really the added value which we can bring. So I think creating a next investment vehicle focused more on that growth stage definitely makes sense for us as a next step. But as said, also looking at the intersections of the three different backgrounds. So again, real estate, PE, technology. We love to see, as said, technology enabled companies, for example, more on the operator side. As said, could be short-term rental, could be campsites, could be hotels, even could be very different types of asset classes. If we find interesting operators, it could also be feasible that we put an investment vehicle next to that to actually invest in the assets as well, in the bricks, in the real estate. And because we do see that the value of real estate is very much driven by the value of an operator more and more. Because I put it very bluntly now, but investing in real estate used to be pretty easy. You buy the bricks, you buy a certain building, you put a long-term lease on top, and then especially with the decreasing cap rates, it was quite easy to make money. And again, I'm putting it very bluntly now. Now, if you want to make money in real estate investing, you need to be involved in the active management of that property. Everything becomes more short-term leases. Everything becomes more flexible. Uh, Tenants demand extra services on top of their lease as well. So you need to be able to manage that property quite efficiently. And most of the capital allocators in real estate are not used to doing that. So this is where the operator of that building enters. And again, to do it efficiently at scale, they need certain technology to do so. I think that's a very interesting combination to have that combination between real estate assets on the one hand and having investors in the operator on the other hand, because they create a lot of value for each other. And actually, the one needs the other. They can't do without.
So, did I understand it correctly that if I can try to summarize that today Amavi was founded as a VC, but you're moving more and more to a private equity player with
What's in a name? But
yeah,
yes, that's a bit of the idea. More growth, let's say, more a bit mature
yeah,
stage.
and but then that there's still the connection with the VC side, and that the PE deals, let's call it that way, that you do can have outside of the financial investment, they can also enjoy the knowledge and the technologies that are part of the VC side of
For sure,
yeah.
for sure. We see Amavi as a platform and a platform which can create different buckets of capital to be allocated to different parts of the market. Partly could be in VC, partly could be growth, partly could be even real estate. So you see that's where we need to focus on. Could be even to specific asset classes, like in hospitality or campsites. Again, could be a specific vehicle dedicated to that as well. And this is the goal of Amavi, because we really leverage on that, again, combination of very different backgrounds. And I think that gives a very interesting opportunity to see opportunities in the market, which other don't. And
Mhm.
that's where we need to differentiate and keep differentiating ourselves.
Makes sense. Sounds ambitious. I'm very curious. If you're
Ambition is what we
gonna,
need, Benjamin.
yeah, yeah, that's absolutely true. I'm very curious if we would do a part three in 3 to 4 years.
Happy to do so.
Uh, yeah. Let's see. As you know, at Bao, the main reason why we started the business was to help solve the sustainability challenges in the industry. We're trying to do our part via the product we've designed and are commercializing now. Um, but in the last couple of years, have you seen or have you met some companies that are really, on the forefront of like the sustainability impact? And if so, how are they doing this?
Yeah, we've seen, of course, tons of interesting and mind-blowing companies, and very different, again, as said. But I think the red thread to what we see, if you want to have an impact in construction, especially on the climate side, what we see is that you're not going to solve this issue or this puzzle with software only, or even with technology only. Like, there needs to be a sort of a tangible component to it if you really want to have an impact, and a lasting impact, to really shift that industry forward. And what I think is an interesting observation is that a lot of VCs have been focusing on this industry, coming from prop tech and then more focusing on climate tech, etc. But with VC dollars or with VC euros, we're not going to change that industry. There's a lot of capital needed to actually invest in tangible assets. And let's say solar panels, renovation of existing buildings, whatever type of industry you're active in, you need a lot of tangible assets. And that requires just a lot of different funding that is currently deployed by VCs. And for example, on that note, an interesting company that we have been following, obviously, is a company Enpal in Germany, because they were one of the first which actually successfully closed huge amounts of funding from an infrastructure investor. And I think this was a very interesting shift in the market. So it's not only VC funding a company to grow organically, but also securing vast amounts of funding to actually fund the assets in which they have invest as well. So what does NPAL do? They install solar panels and other types of assets in homes. I think they're covered over 70,000 homes in Germany by now. And then they give it on a sort of membership or a sort of subscription formula to the homeowner. So which doesn't have per se the cash to invest in the solar panels, but they then in return take a portion of the cost savings as a revenue for the company. Very interesting model, but it requires huge amounts of capex to be invested. And that's why they secured, I think, was it half a billion? I'm not sure, but a huge amount of the infrastructure investor TPG recently. I think that's a very interesting combination that you currently see of a company first attracting some kind of VC to grow the company, VC funding to grow the company, and then as a next step, attracting huge amounts of different types of financing, rather the infrastructure type of financing, to actually go to that next stage of growth, to be able to fund the assets as well. I think that will be a crucial, let's say, evolution that we need to go through in that climate tech space.
Mhm. No, no, absolutely. I fully agree. Before the summer, I was talking with a Dutch founder, actually quite an experienced founder. He basically made like the backbone of a lot of market makers. So he has the first time he did it was for like some kind of European investment platform. Then he did it for a crypto exchange, and now he believes that there is a huge opportunity to do the exact same thing for building materials that are locked in buildings. And when I heard him talk, I think there's also an opportunity to create like a financial vehicle that warrants like the amount of the value of the materials that are inside the building, and that
Interesting.
assumes in 10, 20, 30 years there's going to be these materials are going to have a higher value. um, and what they could do, what he explained, and which I found quite interesting, is for solutions like ours, and there are, I think, multiple like ours, like innovative products who offer a more circular way of installing utilities or materials, that they say, look, we give you 10% of the price of the SAM, by which, for example, we could now go 10% below the market rate, and we get the materials that are inside the SAM. We basically buy the option of
Yeah.
the materials that we can recover at the end of the life cycle of the SAM. And these kind of financial constructions
Interesting.
I find very interesting to think about, because it could really be like a like a rocket engine strapped on circular solutions. Because the
Yeah.
main issue usually is same with cost laminated timber. It's like 5 to 10% more expensive than traditional. It's always the main
Yeah.
issue. We are now closing on to what we hear recently is that we're competitive, but if we could go below,
Hmm.
yeah, that would be a huge difference. But you need, as you say, enormous amount of capital, um,
Exactly.
with a long investment scope, and it needs to make financial sense. So yeah.
It's a very different type of funding, a very different type of, let's say, risk return profile. And that touches
Mhm.
upon, I think, two interesting topics, Benjamin. On the one hand, what you're talking about is not rocket science technology. It's
No.
not inventing a new construction material even. It's not becoming the next software company. It's a radically different business model and a radically different position within the value chain. I think these are fundamentally interesting companies to look at as well. So just to put it in perspective, it's not only technology companies, and just to be clear, we love technology companies as well, but it's just a lot more than that. And that's,
Mm.
I think, an interesting angle to look at. And the second point I wanted to make is interesting that you mention it. Although what we see is in this, let's say, second-hand market of building materials, there's always one fundamental issue: is who guarantees the quality of that material at that point in time. And this is why I believe there's a fundamental role. First of all, it could be very interesting to be explored, just to be clear, but I think there's a fundamental role for the manufacturer of the building material to actually keep the ownership of that material, because he is basically the only one who can guarantee, again, the quality of that material within 10, 15, 20 years' time. So rather, instead of shifting it from the material producer to whatever the building owner, or a second, let's say a third party, why not keep the ownership with the manufacturer in the first place? Again, this is, yeah, we had a lot of debates about this in the past as well, but I think
Yeah, I
that's
can
interesting to
imagine.
think about. Like, what is the best position in the value chain?
Yeah, I think that would make perfect sense. Although, yeah, we work with a lot of suppliers. I think the main issue there is again that, from what I understand, their margins aren't that significant enough to build up the capital need to
Exactly.
yeah,
Again, comes down to the same thing.
yeah, yeah,
But it could be a
um,
separate vehicle next to that, with
yeah,
different types of funding.
absolutely. Yeah, I think there's I think from what I feel now in the market, I think there's gonna be some quite big players who could make some you could do something really interesting in that space. I don't know exactly how or where, or but yeah, I've there's something there.
Something to be explored for sure.
Yeah. All right, Agne, I want to respect your time, and we are closing on roughly an hour. So let's see. Maybe to close off the focus on Amavi itself, are like any specific companies in the portfolio right now that you would give like a little highlight or shout out to the audience? Something that yeah could be really interesting um, to explore.
Of course, yeah, we have all of our companies are very interesting, Benjamin. So mentioning one would, of course, do a
Yeah, yeah,
disservice to
yeah.
the others. No, but just to give one example, which I think is an interesting one to be mentioned, is the French company Cinto, so CINTOO. Why I think this is so interesting: we were, first of all, not per se a deep tech investor, and this is rather a deep tech product, but it seems to be very successful. And why we thought it was so interesting in the first place is it's rather an infrastructure play. So what the company basically does is they have developed a compression technology for laser scans. What is the issue with laser scans? You probably know, either be it on a building site or you want to scan an existing building, you use these tripods with a laser on top of it. You probably have seen that. You put it on a certain spot, you put it on maybe 100 spots, depending on the size of the building, and it scans from that point of view the building. What happens then afterwards, you have compiled the whole building with a laser scan in high granularity because you want to be able to measure on it, etc. But the size of that file becomes huge.
I
And
can imagine.
it's so huge that it cannot be shared. So it gets put on a hard drive, on a local hard drive, and cannot be put in the cloud system even. So what they developed, they don't do the scans, just to be clear. They have just the compression technology to compress these scans into a shareable format. So they put it in a cloud environment, and it suddenly becomes collaborative. So the contractor can use it with the building owner or with some subcontractors or whatever. It's also being used in the Industry 4.0, for example, by BP to scan oil rigs. So in the North Sea, for example, all oil rigs are scanned with that software. So they can make a digital twin of the existing assets and act accordingly. For example, if there's something broken, they can immediately check, okay, what type of valve is this? Okay, I'll send the right valve right away. And to us, this is interesting because it is the infrastructure to go from the physical world, which basically is real estate, quite physical, to the digital world, being the digital twin. But you need a bridge to get from A to B. And this is basically what Syntu does. That's why we believe this is such an interesting company.
Yeah, it sounds very interesting. Like a Google Doc
Sort
for
of.
buildings.
Yeah. Everybody has these scans and everybody just doesn't use it, and they make it usable, which is quite interesting to see.
Yeah, very
But
cool.
again, there are a lot of other interesting companies. So whoever is interesting to know more, feel free to reach out, obviously.
Okay. Maybe very final question then before we switch a little bit to some final, more light personal questions, Arne, as we tend to do. You mentioned that you were also very focused on water and water consumption and water usage. Can you
Yep.
say a little bit more about that?
Yes, of course. So we have two investments in that bucket. So we have Shape in Belgium, which is this company which detects water leaks and gives mainly insights into water consumption. It's not only on leaks, but rather giving insights in consumption of distributed assets and be able to benchmark. So that's an interesting one, mainly gaining traction now in France. That's, of course, a huge market, let's say size-wise, but also regulatory-wise. It's one of the, I think, most pushed markets currently within Europe. That's interesting one. And then also within that same space, we have an investment in Hydraloop, which is a Dutch company, rather on the gray water recycling. So they use shower water and bath water, recycle it locally, could be reused for toilet flushing and garden irrigation or whatever. And that is just such a no-brainer to use water twice, basically, because still a lot of buildings, especially on the commercial side and the larger resi side, they use fresh water to flush all toilets. And that's basically everywhere, because in most of the larger buildings, the roof surface is just too limited to be able to capture rainwater to be used inside of the building. But okay, if you use it twice, at least that is half of your water consumption from that point in time.
How's that company doing?
Very well, actually. It's a company which is from the get-go very international. So they sell. So it's a Dutch company, but they sell mainly in Australia, Middle East, California, and those markets obviously are mainly driven by the water scarcity and the pressure on water availability, which is not per se shown in the water price, but rather the availability of water. Because that again, we talked about the pressures. Often price is a right incentive to incentivize people to act in a certain way, but also just not having a sort of good is also a very good incentive, of course, because for example, certain campsites in southern Europe, at certain times a year, they just don't have any water. Some hotels are even faced with it. Yeah, if you don't have any water, you can't have any guests, so you can't have any revenue. Right? And those people, I can tell you, are quite incentivized to use water twice. So that I think is the only right incentive. If people are really pushed upon the hard facts Like, we don't have any water. If you don't use your water more wisely, then they will act. And it's just harsh reality, unfortunately. Because not only pricing.
Mhm. Okay, yeah. Very interesting again. I think it's going to be a more recurring sad reality. I think.
For sure.
I fear.
Unfortunately.
Yeah.
Unfortunately, yes.
Um, all right. This was already very interesting. But maybe, as I just teased a couple of minutes ago, we're going to close off with some traditional lighter questions.
Okay.
I think these have changed a bit in comparison with a couple of years ago. So maybe let's start with the first one. These are more linked to you as a person than to Amavi as an organization. But if you could have a drink with anyone dead or alive, who would it be and why?
It's an interesting one. I would obviously say you, Benjamin, as soon as possible. But besides that, um, yeah, I have a lot of people which I look up to, which I would love to meet and exchange thoughts. But maybe just to stay within the Olympic Games mindset, a person I admire a lot is it's a bit of cliche, but that is Michael Jordan. And Michael Jordan, not per se because of his physical abilities to be one of the best basketball players in the world, which he obviously is, but it's mainly because of his mindset. And I have been thinking a lot, watching the Olympic Games the last couple of weeks. And if I look, for example, at a certain final, let's say the athletics 400 meters, what was striking to me is to see that within that group, everybody focused obviously on the first, second, and the third, maybe, but there's a large group after that which also did a fantastic achievement. And even in some finals, it was so close. So I honestly believe that the physical capabilities, they are not that far away from each other, to be honest. So there's a certain, of course, level of physical abilities you need to have to be able to play in the NBA or to participate to the Olympics. What I think is a differentiating factor is the mindset. And this is what I admire so much in for example, Michael Jordan, just to name one top sports athlete, is he has this killer winning mindset. Everything is focused on the goal of winning. And he even uses some kinds of elements in his surroundings, and for example in the public during in a basketball game, and he uses this energy and he turns it into positive energy to even be more motivated to win. For example, if people talk negatively or they diss him a bit, and let's say before a basketball game, he turns it into positive energy to win. I think this is a fantastic characteristic. If you have that, it can really
Mhm.
turn any type of, I would say, distraction, even if you don't use it well, but you turn it into an energy to focus on your goal. I love it, honestly. That's
It's
why
like
I
a
admire him.
it's like a judo move. You give me bad energy, and I
Exactly.
turn
Turn
it
it into
into.
positive energy. It's a
Have you
fantastic
seen
characteristic to have.
Have you seen the Netflix series The Last Dance?
Yes, I loved it. I
Yeah, it
was
was amazing.
enjoying from the
Yeah,
first to the last minute.
yeah, that was very good. I also really enjoyed it. And then I also, now that you explained this one, I also did you see the Stephen Curry? Like the last couple of minutes, that was
Insane.
for me the perfect example of what you were
Crazy.
saying. Yeah,
Yes. Mindset.
uh, uh, I was
Yeah, no,
yelling
so
when I
impressive.
watched it on YouTube, like holy, like 4 times he does this, like just at the very end, the last minutes of his career, maybe on an international
Yeah,
level,
yeah.
and he finishes it off like that. It's
Yeah, if you
uh,
do that in that time of the game on that
un-
level, wow,
unbelievable,
a lot of respect.
unbelievable. Yeah. All right. Great answer. One we didn't hear before, so that's always good. Maybe a final one to close off. Is there a book that you've recently read that you would like to advise to our listeners on the holiday, maybe?
Yeah, interesting one as well. I'm currently actually reading a book, so I did not finish it yet, but it really draws my attention, and that's called The Man Who Solved the Market. I don't know if you know Jim Simons. So it's
Yeah, didn't
literally the
he?
man who solved the market.
He
So the
died
founder of the
recently, right?
yeah, exactly. He died a couple of months ago.
Yeah, I know about him.
So
He outbeat Warren Buffett. No, is it that guy?
exactly. He outbeated
Uh,
basically every single investor in the world. And so he's the founder of Renaissance Technologies. Indeed, he was the founder of the quant revolution. Like he built a predictive model. I think this is we're talking about 40 years ago when he launched the company, and it's currently so I would say hot with everybody talking about predictive models and AI, etc. But this is what they did 30 to 40 years ago. So they basically created a model which can autonomously trade on markets. And they started trading with currency and commodities, but then also into equities. And this is how they achieved the consistent return of, I know the exact number, I think it was over 40% IRR per year on a 30-year consistent basis, which is just insane. It's never seen before. I think, again, this is a nice example of not per se technology solving certain issues, but using technology in a smart way to outperform your peers. I think this is just a very interesting idea, and interesting concept.
yeah, absolutely. That guy was tremendously impressive. I read on the holiday, one of the books I read was Psychology of Money. I don't know if you heard about it. And there he was also
Mhm.
explaining that in some circles, I forgot the name, but the person you were just talking about is considered the best investor ever. But the main difference between him and Warren Buffett is just the fact that Warren Buffett was is 92 years old and still active. So he had and he was Buffett got he already had like 3 million when he was 30 something. So he has been cumulatively investing at a lower percentage, at like half of the percentage almost, but for like 60 years. And
Yeah,
I forgot his name. He could only
Jim
do it
Jim
in,
Simons. Yeah.
yeah, he could only do it for 30 years, but he got, yeah, he's also, yeah, that level doesn't
Yeah,
matter about,
exactly. And the consistency of the returns is just never seen before. You can always have a rather, let's say, worse investment year versus a good investment year, but the consistency of the track record was just it's insane. And that's of
Mhm.
course what really yeah delivers the return in the end game.
Mhm. Yeah, fascinating. But he was, yeah, wasn't he like a mathematical genius?
Yeah, he was. What is interesting,
Yeah.
his background was they he decoded the messages from the Russians in the Cold War. And I think that's interesting example what he did afterwards. He basically looked for patterns in certain messages, and by finding patterns, decoding the messages. And exactly the same what you did in stock markets, like finding patterns in the behavior of investors in stock markets, and by doing so, decoding the behavior and be able to predict behavior of certain. If I
Mm.
see signal A, that will probably have consequence B. And you see, of course, you need huge amounts of signals and data to be able to predict it. But that's basically the code he cracked. And that's why the book is called The Man Who Solved the Market. He solved that puzzle.
And is the fund still active now? Did he had like a
Yeah,
replacement?
the fund is still active. And what is also interesting is they at a certain point in time, I think it was still the 80s even, they raised external capital. But then a few years later, because he had consistent high returns, they even closed. They never raised external capital again. So it always have been the majority capital of the founders still. Because if you have, for example, return of, in some years they did close to 100% return per year. So if you have at a certain stage 500 million, 1 billion invested, and you do returns of 50%, 100%, you get at a certain stage from 1 billion to 2 billion and then 3 billion. So it just grew exponentially. And that's why they didn't raise barely any external capital. So yes, the fund is still active. And I think they reaped in total about, it's not entirely known, but they guess about 150 billion in total returns. It's just insane.
Jesus. I find yeah that and then we will come to a close, but I find it also but it's linked to what you said about Michael Jordan as well. It's crazy how even at the very edge of like if it's a bell curve, and sometimes there's like a person who's like everyone, like even at the very edge, there's like
Extreme outlier.
this one girl or guy who's like still so much further than the rest. Like the second and the third can barely see him. It's strange.
True.
It's fascinating how that works. Anyway, Arne, thank you very much for your time. This was a very interesting conversation.
Yeah, likewise.
Um, uh, I wish you the best of luck with all the work you have been doing. It's been going really quickly and really, yeah, it's going hard in those 3 years for you guys. It's quite impressive actually when you say 22 investments, even when there's some M&A involved. Yeah, it's very cool to see. So I wish you the best of luck, and then we will hopefully do a part three in a couple of years.
Yes, I'm really looking forward to that. Benjamin, thank you
Likewise.
as well. Enjoyed the conversations. I wish you all the best as well.
Okay, thank you. Bye-bye.
See ya. Bye-bye.
Thanks for listening to the Bao Podcast. If you enjoyed this conversation, make sure to subscribe to our channel. If you're interested in Bao Living and our Smart Adaptable Module or SAM, go check out our website baoliving.com. If you want to stay up to date, you can best subscribe to our monthly newsletter on our website or follow us on all social media platforms where we're named @Bao Living.